Hey, it's Matt with PriceActionTradingSystem.com, and it is Tuesday. It is April 13th. This will be our chart lesson for today. And we spent most of the day in this really tight range. And I got a couple of shorts here that are green, and there's only a couple of really blue longs here because it's just so hard to trade this. You really want to get a chance to get in real low to on the support or very high off the resistance up here. And there's an upward bias here. I mean, when prices go sideways this long and can't break lower, they're probably going to eventually go higher. And you can see the few breakouts we had for the most part were to the upside, but they'd quickly fail until we finally had this failed breakout the low side, and that's what it took to push it on through. And then next thing you know, we're rallying higher. And you should have been looking for this measured leg from here. There's where the low was. And you can see we actually went a little further than that. Once we got this rally going, prices moved on pretty quickly. So it didn't look like we were ever going to get out of this range. But this market just keeps pushing higher, and it does it in spurts like this, and then does sideways action. That's been the MO for a while now. Notice it will shoot up, and then you go sideways a little bit, then it shoots up and kind of goes. Here's a good example of it. We shoot up, then we just kind of work sideways, then up, and sideways, then up. And we've been doing that for a while now. You can see it. We did it consistently this day. And that's what the market continues to do. We continue to push higher. Where we're headed, I don't know. I can't find any further targets, really, any more near-term targets. So I would expect that we're probably going to correct here before too much longer. So just stay with what you see on the chart until the chart tells us different. At some point, it's going to tell us to go short. And uh, like I said, I did mark 2 green shorts today, but I'm not crazy about them because I don't like shorting this market right now. But it fits the setup, so I marked them. But anyway, it won't take long to go through these trades because there just aren't very many. But let's back out, or zoom in, I should say. I like to call that backing out, but I guess technically we're zooming in. So let's zoom in where we can see a little closer. But anyway, we were in this trading range. You can clearly see this is the overnight highs and lows at this point. 7 o'clock comes right in here somewhere, just as we're making this little dip. We're kind of breaking out of this little. This is just a little congestion area. We break out of there and we try to go lower twice and it fails, and that gives you a trigger to go long. This is basically a double bottom, so you could count this as 0. I did draw a trend line off those first 2 swings. At this point, you don't know if it's going to be a trend line or not, but you try to go short once, twice. It fails. So when it breaks higher here, that's a trap. That's a failure, failed second entry short. I like that one. I only marked this one green, really because it's early in the morning and there's a lot of sideways action here. We aren't necessarily trending up strongly. However, it's probably going to act as a trap. Notice how we're above the EMA too, and this is a range day, so if this is the lows, we're probably going to head back up here. So if you like trading traps and you need to be advanced, this is very advanced, so this is not for everybody. If this would have broke on higher on this bar here, I probably would have marked it blue, but the fact that it made another inside doji, I mean, that's definitely congestive, so it could break out, fail, and pull back, even on a trap. So this one's just a little, it's not a perfect setup by any means. So it's definitely not what I would call a reversal pattern, but it's a failed second entry short, and it does confirm the trend line, and it is above the EMA. So, and you can see it worked nicely. So it ran the shorts out. You can see them all exiting. And of course the market chasers come in and chase it higher. We run up to the other side of the channel and we work back here, and again we're just going sideways. There's no entries in any of these. It's just way too tight to try to trade. I don't think you want to go long or short until it breaks out here. I didn't mark this, but this is like a 4 ticks, And they do have matching lows, so it qualifies for a signal bar. It's just a first entry, and that's a fairly strong move down. No close outside, so it's really hard to mark that. But on that failed break lower, and you can really see there's two legs down here. You got a leg down, a little correction, another leg down. So on a bigger picture, it looks like a second entry. It looks like two legs back. So you might take that. I'm not even going to mark it, but if you took that as an aggressive trade, I'm okay with it. You're better off to wait on the higher low or a reversal. And the higher low comes here, and it's right back into the range high, and we're kind of going sideways again. So I don't trust it. But finally, we push through and pull back, and we test the trend line again, and you close with this big bullish bar outside. That's going to be a trap, probably act like a reversal. So I like going long there. It takes it a minute, but it works on up, and you'd figure we're going back to the highs. But you can see we get a close outside here, and there's actually a second entry right here. It's technically not a second entry. You can see two legs back, but notice it's a first entry, second entry, so technically it's a third entry, but it looks like two legs back. I didn't mark it because it is a third entry, but it clearly looks like two legs back, so it's another one you could argue to be green. There's a little bit of congestion here, so it's a little failed break lower. That gives you another reason to like it. The real problem is we never really came back and tested this breakout. I mean, we're close right here. You could probably argue this tested it. But I would have liked to have seen it come back and test this breakout of the actual channel here or range here. We never get that. So I think you're better off to wait on the higher low, which comes here. Now you got a better entry to run towards a new high. And we do have a break now and two legs up to a new high. So we could sell off. And we almost get a little repeat pattern here again. It's a first entry, second entry. So technically that's a third entry. But again, it looks like two legs down, except there's two legs in this leg and only one leg in this one, where there was one leg in this one and two legs in the second leg. So it's almost a repeat pattern. It's slightly different, but it still looks very similar. But the reason I like this one, I think it's like 3 ticks. Yeah, there's 3 ticks in that bar, and it looks like two legs back, and we got support there. So a little room back to the EMA. I like taking that trade. It's real close to being green, but because it's just 3 ticks, it's such a low risk trade. I like taking it, so I marked it. You get a higher low here, but you're like right back into the middle. There is congestion. There's 3 bars stacked up there. This is a doji. If you did go long, once it just started going sideways there, I always hate to tell people to scratch a trade, but because it could still go higher. And you wouldn't have got stopped out. It would have actually you would have got stopped out on this one. I take that back. If you look back here, even when it came back, but you would have scalped out already, so doesn't matter anyway. And then you actually get another big, nice bullish bar off the support here, and a triple. It's 3 touches, so it's a double test. But look how those bars are stacked up, and we can't get back above that midline. It ends up working out, but I think you're better off to skip that trade. And then it runs up, fails out the top. I like going short there. You can clearly see there's 2 legs up. It makes a double top and a big bearish bar. And we've been tested this multiple times. So this could be a major high. It's still a little aggressive, so I marked it green, but I like the entry for an aggressive trade. It's a quick, easy move, and then it bounces again. And it looks like it trades down here and rejects right off. It doesn't end up taking off that fast, but and you do have to go long back into the middle, but we've already pushed through, you can see, so we probably cleaned everything out, and you can see we end up pushing right back up to the highs again. So as long as you're moving between the highs and the lows, you may want to take these trades. And then there's actually 2 legs back up here, and this makes a lower high. So this is a second entry short. Generally, we don't look for second entries or pay any attention to them in a range. But if you get a setup that qualifies and it happens to be a second entry because of 2 legs like that, then that gives it a little more it just makes it a little more important. So you want to pay attention to that, but you're not necessarily looking for second entries in a tight range like this. So again, this is a little aggressive, but I like it. And you can see now we're kind of stuck in the upper side. We're just chugging along till we drop, and we have this failed breakout. If you were to get a little bitty bar down here, I might say you would risk going long right there on a second entry, because this is a second entry long. Notice this is a double top, so a new high. Actually, I take that back, because it does break higher right there. You could still look at that as a double top, really, because you can see all the closings inside that. So still, you could probably treat that like a second entry, but the signal bar is just so big. I think you got to wait. And you do get a higher low here with a very nice signal bar. Closes back in. You got plenty of room back to the top, and this is probably going to act like a trap and push this thing higher again. And we may actually continue trending this time, because that's usually what these failed breaks out of these ranges generally tend to be important highs and lows. And you can see this was an important high, and this one was too, because we actually made a new low afterwards. And then obviously this was an important low because we trended higher strongly after that. So these failed breakouts, if you can find a way to get in them that meets our rules, take them. This one is real close to being green because there's a lot of sideways, but there's not the bar that looks like a doji or has no body or whatever. So this is it's just sideways action, and it's a big signal bar. It closes back inside. I like going long there. Again, it's real close to being green, but I went ahead and marked it blue because I think that trade is one you want to risk. And then when it turns back again, down again, and fails and turns up, well, now you got your trap right there. Failed second entry short. It closes. It actually breaks lower and turns out and goes out the other side first. You're going to probably get them trapped, and then that one takes off, leads it on off to the races. This one is tempting, but again, that's congestion, and it's right into the highs. I just don't think you want to risk that, even though it comes right off that trend line. Wait till we get on the other side, and notice what happens. We push up. We actually start off that previous resistance that's now acting as support right there, and then we come back and test it once, then we come back and test it again. So that's similar to a double test, and you get another nice bullish bar. You may take that trade. It's right off the key entry point too, plus it does come back and give you that double test of the resistance that now acts as support. We continue higher. I marked this one too. This is one of those strong trends where you don't get any correction really. Your corrections are one or two bars that very shallow corrections, very tight trend channel, and every time you get a bullish bar off that, you just about can enter. So eventually one of them will fail, but you can see even if you had entered way up here, they all would have worked. Even after the overshoot, it would have worked for at least a scalp. So so I'll mark those. They're aggressive, and you need to understand. Most people don't realize that's a very strong move right there. It doesn't look strong, but when you see lots of bars that just keep going higher, they have stems on both sides, dojis mixed all in, and it just keeps pushing higher, very shallow corrections. That's a strong trend, and you can see how that trend line, every time prices came back to it, they took off again. Even up here, after the overshoot, they came back and they still went enough for another scalp. So you have to learn to recognize those strong trends that look like that, because technically they don't really look like a strong trend, but they are. But it's almost impossible for me to mark those blue because they're a little more advanced. But if you're an advanced chart reader, you should be recognizing these kind of trends by now. And you still want to be careful with them, because you're not going to have any room to the top. They're not going to fit any of the rules, but you have to understand why it's different here. The context is different. This is a very strong trend, and it's so strong that you can't even really get a correction more than a bar or so. And you have all these little bars, and you have lots of dojis, and they just kind of keep trickling up and back to the trend line and trickling up and back to the trend line. And so if you recognize that, that's why you can enter like this when normally you couldn't. It's all about the context. We're not pattern traders. So just keep that in mind. If the context is screaming higher here. And I didn't put this on here. I did show you the measured move from earlier, but you'd probably want to measure the range and then use that for a possible measured move too, in case you keep going higher. You see we didn't get there. That's the reason I didn't show it earlier. I'd already taken it off. We didn't get anywhere close to that, but you want to measure that all the same. And another one you would probably want to measure would be this, and then where we started higher here, and we just blew right on through that. So prices were trying to fulfill these two measured legs here, and look how long we had to go sideways before it ran on up there and met that measured move before selling off. We actually overshot it, but that's because this is a strong move and a strong trend. A lot of buying coming in there. When you see those, from a backing out like this, you can see it a little better, but you can see how we're just kind of headed up. The corrections are very shallow, usually only a bar or so, and every time you hit the key entry point, prices rocket out, take on off again, and you can just see it continuing to go higher with all the little bars and dojis and stems. That's a strong trend. So just keep that in mind. That's what I saw today. Not many trades. People gotten spoiled with the volatility we had all last year, and up until the last month or so, it's been really volatile. But the market seems to be back to normal. And when I say back to normal, it's normal volume and the speed of it and all. But it's slowed down considerably from what we had, the volatility that we had. But it's more of a normal volatility right now. And also, I failed to mention this occurred right at noontime. 12:02, and that's about when the bond auction started. And so obviously the market likes what the bond auction had to show. So that probably had a little effect on this rally too. And you can see, regardless of what the news was, the price action still worked like it always does. Prices fell out of this range. They broke out of this range, and what do we say is probably going to happen? They're going to fail and trade back. And a lot of times, after a failed break or two, one side or the other, they'll trap traders, and they'll run it out this side just to trap shorts in and longs out, so they can reverse it. And then the shorts all have to exit, so that starts the buying, and then the buyers that had to exit realize, hey, I was right the first time, I got to get back in, and that gives it enough momentum to push it on through where this resistance it probably couldn't get through before. So that's what happens there a lot of times. Same thing they did here. They couldn't push it higher, they broke it lower, and then look, boom. Right here, they're going along, they can't push it higher, they let it break lower, boom. They trap everybody, and off it goes again. It's a pretty common way they do it, so just be aware of that. But anyway, I'm going to wrap it up. That's going to wrap up our day. Again, very slow day. There's a few trades in here, nothing to write home about. I really don't like going short on a day like this, even though this is a lot of sideways action, and you could have taken some of these shorts. But you just got to be real careful, because this is when you're going sideways this long and you're hitting resistance, but you don't sell off, that's telling you something, because when you try to go higher that many times, eventually you should sell off. And we never sold off. All they did was break it out one time. It couldn't even stay outside the support area. It traded right back in and then took off. That's a strong market. There's strong buying coming in there. So keep that in mind too. But anyway, I'm going to wrap it up. We'll be back again to do it tomorrow. I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.